Patricia, the market seemed to be finally reacting to the Powell news after a rather muted reaction when the report first hit the wires. What's been happening here?
It did take market quite a while to get going, and initially there were thoughts that markets have had like about a week already to sort of factor in the fact that Powell could be at the helm of the Fed. So there was a possibility that this had already been in the price. This morning, as Asia trading started getting going, we had a bit more bearish dollar positions are being put in, and when we had some domestic numbers coming out of Australia as well, with the trade data beating estimates, and that got the Aussie dollar rallying, and then before you know it, the Kiwi dollar started rallying, and then that got all the Asian currencies rallying as well against the US dollar. The Treasury tagged onto it. The yield fell about 2 basis points. And traders also looked towards the stock market, which had a pretty good rally as well in there. So that pretty much put the dollar under pressure. Now, the Bloomberg Dollar Index fell the most in 3 weeks by the mid-morning in Asian time. And it lost about 0.5% against both the Australian and the Kiwi dollar as well. The traders say that the big takeaway from the fact that Powell is at the helm now, or possibly will be at the helm, is that traders will get to sort of have a more moderate interpretation of the Fed path, even though the Fed is still looking at the three rounds of rate hikes next year. The Treasury dealers say that there's still room for them to slow it down, and they may actually put this into the price. So we're looking at a slightly flatter yield curve.